Good morning, everyone. Welcome back to Stock Sense. I'm Malik, and if you are looking at your screen right now, you are seeing a sea of green. But I need you to stop, take a breath, and listen very closely, because what you see is not exactly what is happening. Yesterday was historic. The KSE-100 Index didn't just break a record, it absolutely smashed through the ceiling. We closed at approximately 174,000 points. To be exact, we added nearly 1,500 points in a single trading session. On paper, it looks like a supercycle. It looks like the bulls are unstoppable. But as your analyst, my job isn't to cheerlead. It's to look under the hood. And right now, the engine is making a noise that I don't like. We're seeing a classic case of index management masked as a rally. Let's break down exactly why. Volume forensics and the window dressing phenomenon. Let's talk about the invisible hand moving this market, window dressing. We are sitting at the end of December. This is the time when every mutual fund, every asset manager, and every bank needs their portfolio to look pretty for the annual report. They need the index to close high on December 31st so they can show their clients a fat return. This is why you are seeing massive buying in the heavyweights, the banks, the fertilizers, the E&P stocks. They are pumping the stocks that move the index the most. But look at the volume. Yesterday, we traded around 850 million shares. That sounds like a lot, right? But if you strip away the penny stocks, the WorldCall telecoms, the K Electrics, the core volume in the main board is actually shrinking. The smart money is not buying new positions. They're just marking up their existing ones. This creates a dangerous divergence. It means that once the calendar flips to January 1st, that artificial buying pressure could vanish instantly. You need to be aware of this liquidity trap before you press the buy button today. Sector deep dive, winners versus the fakeouts. Now, let's go sector by sector, because this is a market of two halves. The banking powerhouse. The banks are the generals of this army. Mizan Bank is trading like a beast, holding firm above 440 rupees. UBL and MCB are right behind it. If you are a long-term investor, you are safe here. These stocks have real earnings to back up the price. The energy awakening. Then we have the energy sector. OGDC and PPL are finally waking up. There is a lot of chatter in Islamabad about a new circular debt resolution plan, and the market is pricing that in. If you want a defensive play that pays dividends, this is where you hide. The tech warning. But here is the warning sign. Look at technology. While the index was up 1,500 points, TRG Pakistan actually closed red. Systems Limited struggled to hold its gains. Think about that. In a raging bull market, your highest beta sector is lagging? That is a massive red flag. It tells me that risk appetite is actually low. People are buying safety, banks, not growth, tech. Do not get caught holding the bag in high PE tech stocks right now. The corporate radar, actionable rumors. All right, grab your notepads. Today, Tuesday, December 30th, is arguably the most critical day of the week for corporate announcements. We have special business on the agenda. The banking duo. At 10 o'clock sharp, JS Bank holds its board meeting. The agenda? Matters other than financial results. 30 minutes later, at 10:30, Bank Islami does the exact same thing. In the Pakistan Stock Exchange, we know what this usually means. It hints at M&A activity, a rights issue, or a sponsor buyback. Expect massive volatility in these two names in the first hour. If you're a day trader, this is your playground. The sugar cycle. Also, keep an eye on the sugar sector. Shah Murad Sugar announces its accounts at 11 a.m. With the recent export news, a surprise dividend here could light up the entire sector, from Mizan Sugar to Farron Sugar. Watch the volume here closely at noon. The strategy and final verdict. So, how do you trade this monster? We are in uncharted territory at 174,000. Your strategy is simple. Respect the trend, but trust the level. Your pivot level for today is 173,200. Scenario A, as long as we hold above 173.2, you stay long, you ride the wave. Scenario B, if we break below 173.2 with volume, you cut your positions. That's the signal that the window dressing is over and the profit taking has begun. The bottom line, do not let the fear of missing out force you into bad entries. Let the institutions play their games. You stick to your levels. Watch JS Bank at the open, watch 173.2 on the index. Stay disciplined, protect your capital, and let's finish this year strong. I'm Malik, this is Stock Sense. I'll see you on the trading floor.